Welcome to Fomo Consulting for your daily AMC stock analysis video on Wednesday, August 4th. Ladies and gentlemen, is this the floor? Have we reached the bottom? We shall see shortly. And as always, the apes are winning, diamond hands winning, most importantly, retail investors winning. So if you find this video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. It's a newer channel and I would appreciate the support. Let's get into the video. Thank you to each and every one of you who has liked, shared, commented, and subscribed. It means the absolute world to me. Thank you very, very much. Let's start with a quote. Falling down is part of life. Getting up is living. No doubt we've had our fair share of falling down over the last really month and a half, 2 months since the big run up. But when this does find its bottom, hopefully, and finds its rebound, and all things come together, it will certainly be a good living. Yet another reminder around earnings Monday, 5 p.m. Eastern after market closes, August 9th. Could be a fantastic catalyst for us, at least for a few days shortly afterwards, and I'll show you why I believe that very shortly. Overall broader market got hit very, very hard. The jobs report from this morning was about half of what was expected as far as new jobs. I believe it was 335,000 for an estimate of 600 and some odd thousand. So really the broader market had lower expectations as of today. It caused a lot of selling. As you can see, S&P was down 20 points, Dow down 323, huge loss for the Dow. NASDAQ up 19, and the Russell, which we are connected to, down 24, nearly 25. Russell just absolutely pulled us down like an anchor today, as well as many other recovery stocks. Overall, the broader economy is just suffering from a lot of jitters around the COVID-19 variant. Obviously, the economy, inflation, jobs, things just aren't kind of coming together as everyone envisions all at one time. There's a lot of hurdles and a lot of treacherous waters ahead. We are certainly feeling that volatility, not only in AMC stock, but just the broader market and many, many other stocks. Crypto had a fantastic day, speaking of volatility. Overall, everything is up across the board, at least at the time of this recording, so well done if you're in crypto. So options always lead the way with this stock. As you can see, where we currently are, right around that $30 level, there's about over 20,000 puts that are right at the money. Most are in the money at this point, which is huge if you're in the put side. It's certainly keeping the price down on the call side. Really not a whole lot in our general range until you really get to the $40 strike level. That seems miles away at this point, obviously with the broader market, fighting to stay above 30, even in the low 30s this week, looks like it's going to be a challenge based on the options chain. But let me remind you kind of where we've been. So leading up to earnings in early May, before our big run-up, we suffered through 8 straight red days, as you can see on the far right side of the chart. Those were bleak days, and then coming out of April, which was quite frankly abysmal, it was boring, it was consolidation, a lot of heavy shorting and selling pressure, 2 and 3% down days on SSR multiple days. Those were just bleak times, and quite frankly, I think it strained my nerves personally a little bit more than really I am today. However, as you can see leading up to the earnings, 8 red days in a row is hard to suffer through. We've certainly been through that more recently, but shortly after earnings, we got yet another bounce. And let me just remind you again, as you can see, earnings going all the way back to August of last year, kind of flat, consolidate, run up, and then we get pump after earnings, even on bad earnings for whatever reason. As you can see, multiple red days leading up to the November earnings, and then we got the pump shortly after earnings, yet again in March. As you can see, after the baby squeeze, We were kind of already on an uptrend, but nonetheless, we continued that uptrend based on those earnings, which were certainly not good. Those were Q4. A lot of talk previously in that year around bankruptcy. And yet again, in early May, as you can see, we suffered through the 8 red days in a row, bled off all the way down into the low 8s, and then we actually hit our stride, and we know the rest of the story. So there is a pattern to this leading up to earnings. I wouldn't be surprised if we don't suffer through a couple more red days. Even Monday quite possibly might be green. I'm more concerned and more anticipating what next Tuesday and beyond will look like, especially if AMC posts fantastic earnings and beats or at least meets expectations. German apes suffered the same fate as us, pretty much, down 8.34%, 25.94 euros. You can certainly see the heavy sell-off, but there is a bigger story behind that. As you can see, AMC today sold off pretty much from the opening bell. Had a nice run-up pre-market, not to be held. Obviously, the broader market sold off, as you can see with the Russell 2000 chart below. We pretty well mirrored that, and it just kept us anchored down all day. So without a catalyst, without something to separate us from the pack, some excitement, something to get this stock moving, we're pretty much like a cork in the stream, just kind of floating along with the broader market. And when the broader market sells off, so do we. But we did close down $3.76 today, 11.19%. Closed at 29.84, down a little bit after hours. Is this the floor? Really, the broader market will determine that. We may, in my opinion, based on the technicals anyway, mid-20s is certainly in play at this point before we hopefully hit at least another heavy level of support. We may return back into the 30s tomorrow. We'll see, but we certainly need some buying pressure. We need some help from the broader market, specifically the Russell 2000, as you can see. So what I want to show you here is a side-by-side, AMC to the left. You can certainly see on downtrend over the last 5 trading days on the 5-minute chart. Equally downhill trend on the IWM ETF directly associated with the Russell 2000. Again, is there shorting? Certainly. Is there selling? Without a doubt. But we are also at the whim of just being pulled down by the broader market, specifically IWM, Russell 2000, what have you. So when it has a bad day, typically we do as well if we do not have a catalyst to separate us from it. This is IWM again over really since early June. You can certainly see the overall trend. There's been a few green days certainly, but the overall trend has been downwards really over the last 2 months. It's lost quite a bit of value, and you can certainly see on the MACD and RSI it's just been a slow grind downhill. And again, with us without a catalyst, we're just tied to it, like it or not. So when the Russell and the economy, the recovery plays recover, I believe we will as well. So let's look at AMC over the 1-minute chart. This goes back quite some time. So as you can see, pretty much over July and early August, you can certainly see where we were using that $31 level or so of support. We have now broken through that, through 30, and we are in the upper 20s. Mid-20s could be the next heavy level of technical support. We could recover and get back on top of 30 tomorrow. We shall see. But as I showed you earlier, the options, it's going to be hard to keep those puts out of the money at this point with us showing weakness in the broader market. Again, broader market recovery for the next 2 days will be preferred, but somewhat unlikely at this point with a lot of the COVID variant in the news. So again, a 4-hour chart, no different. We've held that level of support around that $30, $31 level on multiple occasions. We have broke through it now. Hopefully it is a short-term phenomena and not a long-term trend. But again, mid-20s is certainly in play at this point. So let's look at GME. How did GME do? About the same. Again, psychological support was broken around 150. Now at 146.80, closed down about $6 or 4%. Again, without a catalyst, GME is as well at the broader market's whim, quite frankly. And again, we can buy and hold, and that does an awful lot to keep the stock propped up, but it certainly does not add daily buying and selling pressure by holding. So, speaking of buying, Robinhood went nuts today for whatever reason, really for the last 2 trading days. Ran up this morning all the way to $85. Incredible. It is actually running a bit after hours as well, but it closed at $70.39. Absolutely incredible. Pretty much doubled its earlier IPO price. So if you're in this, congratulations. Works had a great day. It was, again, that's another social media favorite. I've been kind of watching this. I have a few shares of this as well. Actually a fantastic day today, and likely more to come in the near future. And yet another social media play that's getting a lot of popularity. The chart looks fantastic. XELA had a red day today slightly, but everything looks to be set up for a pretty bullish run on this particular play, just my opinion, certainly not financial. So let's check on the Vortex short interest data. 41.55 days is the average age of the short positions, about the same as yesterday. And the short interest trends, as you can see, pretty much the trend is upwards on short interest. Obviously, the price falling, a lot of shorting going on, certainly taking advantage of the weakness in the overall broader market. So speaking of that, the utilization is hovering right around that 90 to 91% range. Cost to borrow is about the same at 1.35. Shares on loan about the same as yesterday, 98.41 million. Nothing has changed on institutional ownership, at least as of today, 83 million. We did have a pretty good uptick in volume today, albeit it was selling volume, which is never good. But we did see an increase in volume nonetheless. 300,000 short shares available according to Fintel, and the short interest has gone up about 2%, 15.38, certainly very high. So nothing fundamentally has changed with this. Again, a catalyst buying pressure will obviously make all the difference in the world. A bit of an uptick on the options chain volume, as you can see, 681,000 in total volume, 1.5 to 1 calls versus puts. Certainly still very bullish, surprisingly, even with the several red days and the fall off in the price. But as you can see, a lot of the options purchases, the larger contracts, are in and around the current price point. You do see some 40s on the calls from a strike perspective, but you also are starting to see some puts in the 20s. So again, nothing too terribly crazy going on, but volume has been particularly low, and IV has come down a lot. Sometimes when things are falling apart, they may be falling into place. Certainly not financial advice. Each and every person involved in this play has to make their own decisions, what's best for them and their family. But certainly, hindsight being 2020, at some point, we may look back on these days and understand that this was all part of the process. The price falling, obviously, to get to a level where the hedge funds would cover may very well be part of the equation. But again, the broader market is certainly having its negative effect on the pricing at this point. So I want to thank each and every one of you for watching. If you found this video informative and entertaining, please like, share, certainly comment, most importantly, subscribe. It's a newer channel. I appreciate support. And as always, I hope your life is full of green candles. I'll talk to you soon. Take care. Bye-bye.